Welcome back for the last session here at the Idea Hub. As you all know, today for our last session, we should be talking about assets and wealth management zoom in. We are here with Yogesh Chhabra, Managing Director, Head of FX Services, APAC from MUFG, who will also introduce his fellow panelists. Ladies and gentlemen, make sure that you can come and take a seat, grab a pair of headphones, and make sure the sides are blue. If not, please let our staff know. We'll change it for you. And also, after our session, please put the headphones back. Thank you so much. Now, ladies and gentlemen, please put your hands together for a warm welcome for Yogesh and our speakers here on the stage. Thank you so much.
Thank you. Could I ask my panel members to introduce themselves?
Hi, I'm Fraser Nelson. I'm from Scope Markets. I'm the head of global business development. I'm here today because we're a growing brand, traditionally a liquidity provider for the last 10 years, and we're moving more into the professional and retail space. So we're coming to meet more traders, and obviously we're so thankful to be invited and to be part of IFX Asia.
Hey, hello everyone. I'm Vincent Pang. I'm Director of UK and partner of CBCX Group. I'm here today with these two gentlemen to talk about wealth management aspects. And at CBCX, we are a liquidity provider, providing FX, precious metal, and the CFD liquidities to hedge fund, family office, bank, and brokers and professional traders. Today, I'm glad to talk about with these two gents together.
Thank you both. Maybe if I set the scene about the topic. So I guess asset and wealth management as the industry is expected to double in the next 5 years in the region. So one of the things that we find that investors are seeking is more institutional support and to be treated more as a professional wealth management with tools and advice that matches. So perhaps if my panelists could kick off and talk about what they see as changes coming in the next 5 years.
Fantastic. I mean, let alone the changes in the next 5 years, the changes in the last 5 years are amazing. If we look from a tokenization point from cryptocurrencies, that was the kind of base point, let's say, 8 years ago. And we've started to see more of this across the market. So from scope, that tokenization we've taken to like fractional trading and stock and share trading. We've given clients not just the derivative form, but a cash option. So we're seeing more of a catering and more of a demand from that basis. And I'm sure you both can see that as well. From the lower end of the market who were maybe priced out and couldn't access it, to even the top of the market who are looking to decentralize down because of the lack of margin points. From my standpoint, I don't think it's a lack of interest from people. I think sometimes it's a lack of technological aspects. So 5 years ago, people didn't have the ability to access them either via platforms. There wasn't the trading option. The data points were there. The regulated brokers, multitude of these options. But now you're starting to see more and more of them come into the marketplace and offer it to the, let's say, the lower rung of traders. Whereas the barriers to entry used to have 200, 300, 400, if not millions in a private family. Now you're seeing this fund entrance with maybe 5 and 10,000 buying into like what we see as traditional small bond portfolios and things like this going into. And I mean, yourselves, you probably see it on the institutional side, you're seeing that growth in the flow, especially in the traditional markets, on the indexes, the shares, the stocks. And a lot of this is brokers are starting to put together ETFs. You know, where we see an ETF as a traditional is now become a derivative ETF where brokers are creating their own synthetics. Something we do at Scope, something we're seeing our contemporaries do in the institutional side as well as the traditional market.
Vincent, how about in the institutional side? Do you mind adding to that? What do you see happening in the institutional side?
For cryptocurrency?
So in general, as the landscape changes with the new generation of investors coming along, what are the changes that you are seeing?
Yes, I see. I think from liquidity perspective, we do see more younger generation joining the industry, and especially in Southeast Asia. And we can see the economy is opening to the world, and with local market, as we see, like Vietnam, they have their first very big US IPO, and so they are very open to the world now. They want to get access to the developed market and into their portfolio. So as CBS Group, we are very into this group. As myself, managing Asian Pacific business, we would like to take the mature asset class from London to Southeast Asia, to Asia, and to more emerging markets. So they have diversified their portfolio and to increase their wealth, from my perspective, and CBCX Group. Yeah.
So Vincent, I mean, when you have these different regions in Asia Pacific, right? So some countries have rapidly aging population, while others have, very young population that's growing fast. So as a wealth manager, can you be all things to all people, or do you need to really focus on saying, my target audience is the younger generation, or it's the more mature market? Do you need to define a market? What do you see as the right thing for a wealth manager?
Of course, I think for both different generations, either aging or young people, we should care both of them, and at the same time, we need to create different products for them, because like the older group of people, they might consider more like some product they are familiar with, like ETF, like stock. But for the young people, they are very into like crypto. This is what they see the trend, and they want to capture the trend. Like if you see USDT, it surpassed MasterCard as the second transaction protocol in the world, just after Visa, last year's data. So with the new technology, it's increasing the efficiency for value transfer. So for the young people, they're really into something they can make big change. Like if they are in the traditional asset class, they might be the same. But for the new asset, they think they can be there and beyond. So this is my idea. I think we should care both of them, and we need to design different products suitable for them in their interest. Yes.
100%. And I think to follow up on that, for example, we're saying about generational. If we take Korea as a prime example, traditional Korean trader for let's say before 2020 was 45 plus, male dominated, in a traditional office job, etc. We've seen obviously the rise of cryptocurrency from COVID with lockdowns and stuff like this. And as you said, with USDT obviously becoming a main transactional, it's created the interest in trading. And what a lot of these people have done is, as well as trading the physical, they've looked at the derivative with a leveraged product. But this has now led them to Forex, it's led them to gold, it's led them to stocks. So now what you're seeing is the average age in Korea has gone from 45 plus, so now we're looking at 23. So suddenly the demographics of who you as a broker or financial institution, how you cater to them for. Whereas traditionally they wanted to sit down in front of their computer, have multiple screens and look at it. Now it's about apps. Now it's about how can I get more data for what I'm having. So the brokers, and something we do on a specific point, is you need to provide more data points for your clients. So we have multiple analysts working for us who are producing in-house material for our clients, just saying, this is what's happening in the market, these are the previous movements, this is where it's going. Why? Because this is what the guys are feeding off. You have a generation that has made, in some cases, 22-year-olds who made from $100, $200,000. And now they're at the point that they've realized what demand and supply is information. I think a lot of the time through our generations, we've gone to it's this mass market where there's dark players in there and whatever. But I think we've got away from what the core is. It's a demand and supply product. If more people are willing to pay for it, buy it, than sell it, the price goes up, and vice versa. And I think sometimes we overcomplicate things, and I think that simplification of an asset is actually, you're seeing it across more of the board now, and you're seeing people move on those things and the traditional volatility come around. And I think, with the US election next month, with further elections, probably in France, a second one this year, potentially for more across the world, you're going to see that volatility. And I think, the opportunity for the trader is going to be very high in this next 6-month period. And allowing them to look at it from multiple asset classes is the way to go, not having them pigeonholed into individual categories.
Vincent, so for the wealth manager that's looking to onboard this new generation of investors, what does that mean practically speaking, right? Does that mean that you have to offer, more diverse range of asset classes? Does it mean you have to specialize? What do you see happening from the asset manager, the wealth manager's perspective?
Yeah, I think definitely the new product is important for them. You need to get the product they are interested in, and for them to understand, and then for the class asset class creating opportunity for them. like for example, in Vietnam, like they have their new companies they can invest into, like a Vin Group. I think it's if you go Vietnam and you can see the car running on the street with a very good color, blue, and you're gonna like it. So it's not like it's the color they like. So very young color, and this what attracting their attention, and that's why they are investing into the stock. So for young generation, their thinking might be different from like because they have more emotion, they want new things, and also from the marketing perspective, how you host your campaign, what they are into, like maybe the NFT card, maybe the new crypto asset, the group, and we need to create a champion and following their interest. Yeah.
Fraser, so maybe if we switch topics to tokenization, what does that actually practically mean from an end user's point of view? What's the advantage of tokenization? Why do we need it? Why do we want it?
The tokenization, basically, traditionally a company IPOs into the market, you have to pay an underwriter, you've got minimum capacity points and stuff like this. Whereas where you're seeing tokenization now is it's not just about cryptocurrency. People mistaken it to be, a Shiba Inu or a Bitcoin or USDT. That's just one part of tokenization. The key thing that people need to look at is it's the devolution of wealth and trading. That's the key point behind it. So if companies are looking to IPO now, you don't have to go to an AIM or you don't have to go to a traditional stock exchange. Pardon me. In essence, you can create your own token. You can launch it out and people can buy into your company. Now, the advantage of that is twofold. Number one, you can do it a lot quicker. Number two, most of these people are online and have active forums. They're doing things that, most fully listed companies do once a year or twice or once every 2 years where they have general forums. Most of these guys are having it every month. They're voting on the direction of the company. You can have a real say in what you're doing. So instead of people just buying a share, owning a share of Apple where you have no control, no voice, now you can stick your $10,000 into this company that you believe in the product, that you think you would buy yourself. But not only are you investing into the product, you're also suddenly you have a voice in the direction. So you have ownership as well as true feet in the door. And I think that's the difference. That's where we're seeing. And one thing that Vincent mentioned just before about wealth management and stuff, where we're seeing this movement is there's traditional wealth managers who aren't just moving into the tokenization points, but they're taking advantage because what it's done is it's opened up the idea that instead of you having to buy in on a $1 million level, I can just break your $1 million up into 1,000 chunks. Now, 1,000 chunks is a lot easier to then get multiple investors to come into. So we're not just seeing it in that IPO point, we're seeing it into people are using the token to buy into a fund, which is then investing in other things. So we're using it as revenue generation, as an investment vehicle to actually buy into a company like a traditional IPO, to a coin where it's a currency that might be doing things. Now, I think we can all argue on the different valuations of a stable coin or where a coin is. But I think one thing we can't argue at is something like El Salvador, which did this 3 years ago, 4 years ago, and I think yesterday, President Bukele announced that they're no longer going to have to be taking foreign debt because they're literally not issuing their own coin, but they're having people underwrite the currency, borrow the Bitcoin and the cryptocurrency from individual investors. So now you have a point where a company is allowing you to take on sovereign debt, which I think it's literally true tokenization. You're taking it from banks and global organizations or countries to the individuals can actually invest in their sovereign wealth, or someone from another country. And I think that's where tokenization comes from. It's the true democratization of investment, that you can do everything from $100 to $100 million, but you have the same power no matter what you're doing.
Vincent, any benefits for the institutional side, for wealth managers? Are there any benefits from tokenization that you see?
Yeah, I think from wealth management perspective for us, I think because we are from London and now we are doing FX, gold, and stock indices. So I think for us, we want to introduce to the young generation. It's not only crypto to invest into. And as the Jans mentioned, that tokenization is not only about Bitcoin, it's not only about USDT. It's also like a traditional access to be tokenized for the assets to be easier to be accessed. And that's what blockchain creating the value. So from our perspective, we also want to give a bit of education to the local markets, because like US stock, UK stock, Euro stock is locking still the most significant amount of value. So as the young generation, they should understand. And also the tokenization part, a lot of it is coming from traditional financial markets. So they need to know US stock, how like as we mentioned, the more traditional part is invested into, and how they invest, why they invest. And they should participate in the larger part of the asset. Because crypto is now, if I'm not wrong, it's still less than 2% of the world asset. And although it's, of course it's increasing huge and quick, it's having a cycle, like a bull market, bear market, and the cycle matters a lot. But for FX, for stock, for like stock indices, the traditional one, ETF, the cycle is not that obvious. So you can have your way to invest, and you can have your right strategy to invest into the portfolio. And for what CBCX thinks, we do think diversify is very important. It increases your wealth, at the same time, it decreases your risk. So that matters a lot for us.
Yeah, so something exactly mentioned there with the difference in trading, and you mentioned trends and patterns, these seasonal factors. So the key one I always say to everybody, I was an oil trader to begin with, so it's one of my favorites. Euro, Norwegian krona. So traditionally for 19 out of 20 years before 2022, the Norwegian krona rose or sell based against in April and May by a range of 4.5 to 6% every single year, based on the auction points of the new plots for the oil. So anybody who knows this, you just follow the auction prices where they are, and that's where you bet. There's your 4 or 5% on Euro Norwegian kroner. I can make my money, I bank it down. But as a new trader, what happens is you come in, you learn all this technical analysis, you learn everything about the market, but you have no idea about this trend and pattern. So you come in, everything shows you a drop, everything shows you trade exactly the right way, and you get margin called and you lose all your money. Or vice versa, you make so much money that you feel like you're the Hulk and you've gone over the top. What tokenization mainly does is it removes a lot of these factors away, because suddenly we're back to exactly what I mentioned before, base level of a demand and supply point. So you can go back to the 1920s of a ticker chart, ticker taper coming out and seeing where it is, and people trying to buy and sell in front of each other, who has a quicker connection, etc., etc. We'll never get to that point, but what it's doing is it's removing the bigger boys' impact from the marketplace, because nobody knows who's holding. I had a client the other day who came to me and said to me, I'd like to sell some Bitcoin. Would you happen to know anybody who can help me? Not a problem. I just said to him, it's KYC. I can introduce you to some good OTC banks and whatever else. This gentleman ended up holding the 65th biggest wallet of Bitcoin in the world. Very randomly, again, we've connected on that aspect. But what he wants to do is, he doesn't not believe it anymore, but he's holding 12,500 coins. So what he wants to do is he just wants to sell 1,000 of them. But he doesn't want to go into the marketplace, dump them on an exchange and drop the price, because he's not an idiot, because he believes he could demoralize the asset and cause a run. So his attitude is, I'm going to go to an OTC desk, I'm going to split my trades into 5, 10 coins, I'm going to take them across the market. And that's the difference. These trading has gone from the bigger boys not caring and wanting to dump because they want to get out, to the bigger boys in these treat it as a community. So they don't want to harm the asset value. They don't want to harm the community of traders. And I think that's the mindset we're going to. We're seeing this switch from it's all about the brokerage or the bank's money to it's about how do we all make money? How do we treat this as a long-term asset? And I think that's the key thing. We need to stop looking at it as just a trading aspect and look at it as a community aspect of what people are using it for.
At the moment, if you look at the very biggest institutional investors like endowments and so on, so they have access to asset classes that nobody else has access to. So because of their size, right, they can say, okay, in my portfolio, I have an office tower in New York, I have commercial real estate in Shanghai, right? And that's not available more broadly. Do you see that coming down with tokenization? Do you see that being available to more people?
I think, I think you're seeing more people look for investments. I think you're going to start to see a lot more property developers. I think you're going to look for anyone who's looking for finance move more towards tokenization for multiple aspects. Look at Ripple, for example. When Ripple was out in 2016, it was one of these 7 cents a coins. Then suddenly they announced with Santander to do the settlement. It jumps to 130, drops back down to 107. People said it'll never last. It won't. But why won't it last? I can settle quicker. It's cheaper. There's no intermediary bank fees. There's no arguments on exchanges. It's literally the price is what the price is what the price. And I think you're starting to see now people see that adoption over long term. You're starting to see people see crypto as that stable asset now. Something is more of is a store of wealth. So once it becomes a store of wealth and there's an underlying value to the product, suddenly people can go, right, I will use this as the underlying point of value, and I will use this mechanism to fund myself to build a 70-story skyscraper. Because why would I go to a bank and take a bond at 7-8% when I can buy from my investors here and pay them 3-4%? And more importantly, I can use that money for other projects. They can take some of the money that's saved back. I can pay my guys back. They have a voice in my project. And I think that's where it comes from. It's that community aspect. That is what's going to change the investing landscape.
That's really interesting. Switching gears a little bit, let's talk a little bit about the risk side of things. So maybe Vincent, you can start things off. So you mentioned diversification before, right? And there's really two kind of schools of thought on that. So there's the one side that says, diversification is really important. But then there's a famous Carnegie quote, right? Which is put all your eggs in one basket and look at it really carefully, right? So that's the other extreme. Now, if you are a money manager, historically money managers have tended to specialize in, you are a FX guy, or you are an equities guy, or you're a bond guy, right? Who is looking after the diversification? Who's looking after the holistic risk management? Whose job is it?
I think it's the job of the provider you choose, and also the job of yourself. Because as we are talking about the leverage, and in the market, they might say that if you offer a high leverage, it's high risk. Actually, no. Actually, if we offer you higher leverage, you put less margin for you to trade. But the reason, the issue being like how much exposure you're gonna take. So for example, if we want to take 1 million, like I offer you 100 leverage, you can put how much money to hold the position. But if someone offering 1,000, you can put less money there. But the issue is, can you manage your self-risk? Are you opening the same exposure, or with the higher leverage, you are opening more? So to answer your question, I think first of all, it's the provider. We need, as a liquidity provider, CBCX Group, for the clients they trade with us, and we need to define their risk scope. We set up NOP, so how much max exposure you're gonna take. At the same time, we agree a leverage and for you to hold your position. At the same time, always once the exposure of the clients is increasing, we always mention them to pay attention to the risk, and by different assets and by different currencies. Because for FX, I think FX risk is the fundamental thing to all the investment. For example, we have a lot of gold, physical gold, like factory, they have their huge gold exposure. But when they work us, they are reducing their exposure when the physical is delivering. And this is a very important part of our business for helping them to reduce the risk. But some of them, when they see the market movement, instead of only to hedge the risk, sometimes they want to speculate as well. So when get to a point of speculation, I think risk matters even more. And when you are doing hedging, you shouldn't mind you are making money or losing money. So it's both. The provider should giving the clients a right risk appetite. instead of encouraging just to trade and for the provider to make money is wrong. And at the same time, the investor themselves should know how much risk they are taking. Are they hedging? Are they speculating? So what's your goal? What's the investor's goal? So I think two ways are both important. Yeah.
I couldn't agree more. I think it's the onus is on the provider, the broker, the financial institution. From our aspect, we warn clients as much as possible. We give them the information, but at the end of the day, it's their choice. But one thing that we use is we obviously categorize our clients as well. So if we have a very base level retail trader, we'll give them what we call dynamic leverage. The more they open, the smaller it gets. Some people don't like it, but the way we look at it is we're trying to help you manage your risk. We're trying to help you see where you're going, what you're doing. At the end of the day, it's not our job to tell you how to spend your money. The same as it's not a casino when you go in and you decide to put it on black or red, or you decide to go on holiday and spend 20,000 opposed to 5,000. It's no one's job to tell you, but it's good to be informed of the information. Something you mentioned before about with gold, we see that quite big. We have a large proportion of the whole of MENA, but in terms of Turkey and Dubai, a very large proportion of the souk market there in gold. And that's something we see. Originally, 8 years ago, it was all about guys coming in and hedging, managing their exposure, etc. But now you've seen the last 2 years, I would say, a big creep that these same guys are now speculating into the marketplace. Now, how I warn someone like that compared to how I warn a retail trader is two different ways. Why? Because they're a professional in the industry. You buy and sell gold as a job. Therefore, I'll give you the standard warnings of where your margin is, where you're sitting on applications, and all these kind of things, and what you should do. But I'm not going to hold your hand. Why? Because you're a big boy and you've told me you're a big boy. Whereas retail clients, your job as a broker is not to just give them an opportunity to trade. Your job is their well-being. You want them to stay in the marketplace, because if they come in, they lose their money and they exit in 20 days. That doesn't help anybody. All that it does is it turns them back to leaving their money in the bank and not making any actual cash. So the whole point of the FX industry, tokenization, traditional trading, is to give people the wealth option, but in a more accessible fashion. People don't want to go to stocks and pay 8% commission. They can't afford to do this because they don't have the barriers of entry. So as a Forex broker, as a crypto provider, whatever you want to call yourself, your job is to protect your client at the end of the day. But it is their choice to make. And if they want to lose all their money, they can lose all their money. But you should warn them about it. You should prepare them for it. And there's one thing I always say. There's 3 guarantees in life: death, taxes, and you are going to lose trades. And that's it.
So if you're a professional money manager right now, sitting where we are today, given all the volatility that's happened, geopolitics, global tensions, what are the main risks you see, Vincent?
I think for the past 2 years, the market is very volatile, and it's creating more volume for liquidity provider and brokers. At the same time, it means that the clients, the investors, they are actively hedging and managing their risk. So like gold, they keep reaching historical high, and it's higher and higher at the moment. So from our perspective, at the moment, we see that the customer behavior. For the previous commodity traders, their behavior is more like a stock trader at the moment. And for the previous stock traders, the behavior is more like a commodity trader, especially gold. And in our mind, gold is commodity, and they should be traded as a high-risk product. But at the moment, we do see customers trading gold as the behavior of stock. They think gold stock in the value, and they see the central bank buying gold, and they see the gold keeping reaching story high. And sometimes it might drop and because of profit taking. Instead of we don't see it's because of the holder of gold is decreasing. That's what we see at the moment. So the current risk in the markets, I do see from our perspective is higher because of volatility and geopolitical tension, the elections, also the wars. So very important to bear very lot in mind for the risk management.
I think it's on a double-edged sword. There's multiple risks. I think the main one, though, as Vincent said, is the volatility. Volatility can be your friend and it can be your enemy. One thing I always say to whether it's a trader, IBs, fund managers, whoever, if you're not confident, don't trade. That's the only way to stop yourself and to remove the risk.
Well, professional money managers have no choice but to trade.
100%. But this is where it comes. But on the money manager point, as you mentioned, for me, what I'm actually seeing with the money managers, I'm seeing the diversification. So whereas 3-4 years ago, I was chasing money managers to diversify into FX with leveraged products, now I'm finding money managers are coming to me and they're looking to ask on things like swap-free accounts, can I hedge with you guys? Could I hold 2-day, 3-day positions? So what we're now seeing is they're utilizing the FX, they're utilizing the leveraged products, not instead of their traditional products, but in conjunction. So they're using the lower margin requirements, lower capital requirements to come in and do this. But it's across the board. As I mentioned earlier, I'm a traditional oil and gas background. So one thing that we're seeing at Scope is we're seeing a massive increase in ship owners and ship management companies. Why? Because marine diesel is traditionally only hedged as a futures in the futures market. Me as a ship owner, I'm buying my oil on 60-day, 90-day, 180-day contracts. Well, I don't mean to be rude. I don't even know what the price is going to be tomorrow, let alone in 6 months. So if I then start having to sell my positions, no one's buying, I'm taking big hits. Whereas now, a lot of these owners, we can get you a CFD on a marine diesel 25. You put in 100,000 of capital on a 20-to-1 leverage point. You're able to cover out $20 million of your positions. So suddenly, they're not having to post the capital. They're not having to put extra money of working capital they could be using somewhere else. But take that down even to smaller. We're working with farming communities and cocoa producers in Ghana. We're using cotton producers in Cameroon, because all these organizations have the same idea, but they don't know how to hedge. Now, when someone says to you, and for your guys that'll be a lot more applicable, someone comes to you and said they want to hedge cotton or hedge this, you're going to ask them for a lot of money to open up that account. You're going to ask them for a lot of KYCs and backgrounds. But when they come to us, it's a lot more simple for them. We get them the asset, they trade into the marketplace. So again, I don't think we're not replacing it, but we're seeing a diversification, and the tokenization of the market is changing it, because the way liquidity providers are going to start doing contracts are very much going to start moving into that tokenization side, because as we said, we're seeing that fractionalization of trading. So the traditional market, the traditional model doesn't suit it. So the only aspect is blockchains, because blockchain is a technology that we can combine with what we're doing already, and it gives us that downline. And I think within 2 years, you'll be seeing most big institutionals doing it, and I would predict in 5 years, most banks will be offering CFDs and tokenization trading in one form or the another, because they need the margin as well. You know, less people are holding money with banks. I mean, I think most of us here could probably say we use, again, there are other providers, but someone of Revolut or Wise or Bong or one of these, we all use these cards when we travel. I don't think I've used my bank card to do a transaction for 6 or 7 months, apart from a credit card to rent a car. So people are leaving less and less money with banks these days. That means less margin. Less margin means less money to loan, less money to invest into the marketplace. So I think it's the traditional side where they're going to start coming in more to what we're doing, which means brokers in our place is going to be M&As. People in your positions are just going to have more liquidity and more. And I think the volatility is only going to see that upward trajectory. Whether it's a recession, a lockdown, or a boom time, people want to trade and make money. And I think it's the next 5 years, I think we'll see banks and everyone doing it. And I think it will be a very different landscape to what we see today.
Vincent, perhaps some last words from you on what you see the next 2-3 years.
Yeah, I think from our perspective, for crypto and tokenization we talked about, for us, we are more into the function part. As USDT, like a crypto, it making wealth transfer, very efficient. So for the brokers who take crypto as deposit method, it spends 2 minutes for their fund arriving your wallet, and then you convert it into fiat currency. By of course AML and the AML compliance policy. This is the efficiency the broker can do. But if we think about previously, like if the bank closed weekend, it takes another day, and if it's a holiday, it takes another day. And even for the same working day, if you transfer money from Middle East to Hong Kong to London, it takes another day. So from function perspective, we do see is really increasing the asset transfer efficiency, which is useful for sure. So if you are margin call, if you need more margin, it takes seconds to convert. So I do think in the coming years, crypto is a trend. At the same time, I do see the traditional assets being there for hundreds of years, with its value locking still the very significant part. So I do think for Southeast Asia, for the emerging market, they should look into both. They need to diversify their portfolio, and they need to think about what's their strategy, what their goal is. Very important.
Thank you very much, both. That was really interesting. And on that happy topic, let's perhaps open the floor to any questions anybody might have. Thank you.
Thank you.